All right. Well, thank you everybody for joining us. And we would like to thank Pittsburgh's Financial Empowerment Center for joining us today as well to be able to provide you with this presentation about understanding student loans. So I'm going to go ahead and give it over to Becky and Alicia.
Thank you. Thank you for having us today. So I am Becky Johnson. I am the program manager for the Pittsburgh Financial Empowerment Center. I'm here today with my colleague Alicia Donner. I'll let you just, if you.
Yeah. Hi, Alicia Donner. I am one of the 4 Financial Empowerment Center counselors in Pittsburgh, and during normal times, I primarily work in the East End, so in East Liberty and Oakland. So I am the closest counselor probably to Turtle Creek right now. So
I think so. And just for those of you who don't know, we'll have some information about this at the end too, but the Pittsburgh Financial Empowerment Center, we're a program in Pittsburgh that launched just over a year ago. And what we do is offer free one-on-one financial counseling to anybody in the Pittsburgh area looking to talk through a financial issue, challenge, goal. So today we're talking about student loans, which is one of the big topics that we get quite a few questions about. So we're so excited to have this opportunity to come out and talk to you all about, what we know about student loans, share some information, hopefully answer any questions you all have. And if you have questions throughout, feel free to put them in the chat box, I guess. And we're going to be monitoring those. So if you have a relevant question, put it in the chat. We can answer it as we're going through, but we're also going to try to leave some time at the end for questions as well. So just wanted to say we're happy to be here, and we hope that you enjoy what we have set up for you all today. So Alicia and I are going to be going back and forth to share out this information. So we're just going to jump right in to be cognizant of everyone's time. So first of all, we're a big fan of polls and questions just to kind of see where people are at, but also to keep you all engaged. So I'm going to launch a poll here in just a second, but our first poll question is, what is the average yearly cost of tuition, fees, and room and board for a full-time undergraduate student? So what I'm going to do is launch this, and you should all see this come up on your screens, and I want you just to click the answer that you think is the most relevant, or what your guess would be, again, for that average yearly cost. Perfect. I'm seeing some votes coming. We'll just give it a few seconds for people to vote here.
Yep, I'm seeing this participation too. Exciting.
We like to keep people on their toes, All right. So it looks like we've gotten probably the majority of our polling here. So we're going to go ahead and end this. And so you can see, well, actually, I guess you can all see, I don't know what you see. We're gonna share out the results of the polling. So I think you should all be seeing how you voted. So it looks like we're basically tied 33% each between answers B, C, and D. And so what the actual answer is here is, so there you go. For those of you, the answer is 23,091. So 2 of you were correct. But that's the average cost for an undergraduate student when looking at the cost of school for 1 year. And that's across public, private, nonprofit, and private for-profit institutions. So again, this is taking into account a lot of different types of colleges and universities. So, obviously some are going to run more expensive than the other, but just so you're aware, that's what we're looking at as a per year cost heading into college. We have a few more statistics that we just wanted to share out here too. There's been nationwide growth in student loan debt over the past decade, from 2016 to 2018, and we're looking at basically an accumulated total of $1.56 trillion in student loan debt, and that has grown by almost $1 trillion in the last decade, really, not that long ago. Student loan debt is making up a huge percentage of the debt in our society. Across the United States, we have 44.7 million people who have taken out loans or are in some type of debt to pay for school. This could be someone who has a federal loan or a private loan. We're going to talk about that as we go through our presentation today. But just so you have that in your mind, this is the kind of percentage of the population. 44.7 million people in our country have student loan debt. And of those borrowers, we're looking at almost 11% of people are in some type of 90+ days of delinquency. That means that for, your student loan payments are made every month. That means for some of these people, they're about an average of 3 months behind or more on student loan payments. So we're going to talk about all of that today. You're going to learn kind of how to walk through. Actually, well, this is a great next slide. I have an overview slide, so I'm going to wait until we get to that. But today we're going to talk through kind of the steps to guide you through everything you need to know about student loans process. We're going to talk about some options for financing school, some sites and tips and tricks that we really like. We're going to talk about the basics of borrowing, understanding the different types of loans, because these are things that are going to need to be in your head when you're going through and you're thinking about how to pay for school and then how to apply for it. We're going to talk about the actual application process itself, something called the Fafsa, for those of you who don't know. And then we're going to talk about your repayment options. I know we have a mix of folks in the room today. Some of you might be students. Some of you might be people who have student loans or who have kids who are kind of starting the college process. So I think there's going to be information to take away for everyone here, kind of no matter where you're at. So we're really excited to share this out with you today. So we have one more question here. Just in general, what % of borrowers are behind on their student loan payments? This might be 1 month, this might be a year. So I'm going to toggle another poll here, and I'm just curious to see if we want to see what % of students are behind on student loans. So I'm going to go ahead and launch this. So you all should be seeing this, and you can go ahead and put in your answer. Where do you think we're at here? Gotten a few responses so far. Okay. All right, we'll just give it a few more seconds. Okay, so it looks like we have a pretty, I'm going to go ahead and end this poll. It looks like we have a pretty general consensus of about 25%. So let's actually see where we are at. Yay! Okay, first of all, you all are pros when it comes to the student loans. Yes, roughly 1 in 4 borrowers, or 25%, are behind with their student loan payments. And that's, I realize that some of these statistics might seem a little bit dreary or dismal. It's not, this isn't great, but we really wanted to be upfront with folks about, the student loan debt crisis in this country today. And I think it's really important to know that people have student loans, that's okay. People are in trouble with student loans. That's also what it is, but we're going to share out some information today that is hopefully going to be relevant to you or anyone in your life that can help you manage your student loans and feel confident going forward that you're going to be able to make good decisions and be able to pay this back. It's not uncommon to have to take out debt. That's part of financing education in this country. So we just wanted to be really upfront with folks about where we're at with this. So in looking at the student loan situation today, we already talked about, there's a huge increase in the number of people who are borrowing across the country. Going to college these days, very few people are going to be able to go for free. The cost of college continues to increase every single year. And when you graduate, that's making it hard for people for graduates themselves to pay back their loans. But also, even at the FEC, we've seen a fair number of people who went to school for maybe 1 year or 2 years and took out loans to pay for that. And then they didn't get that degree. Maybe something came up in their life, they were unable to finish. We've had a few people who've gone to some of those institutions that have closed down, like what's an example? The Art Institute or Everest Institute. Universities, usually for-profit colleges that have closed down and they haven't been able to complete their degree, they are still paying back the debt. And I know there's legislation in place that's working toward that, but we have a fair number of people who took out loans, didn't finish their degree, so maybe they're not getting that expected income that they thought they'd have to be able to pay back this debt. And then we're also seeing family members, parents, grandparents, aunts and uncles, who are helping to provide additional support to students who are either in college or graduated, but don't yet have that income or that job to be able to pay back the loans. So this is really spreading across households and affecting folks kind of across the board. Just to give a picture here, of the change in household debt over the last roughly 12 years, you'll see that student loan debt here has ballooned in the last 12 to 15 years. across households. And this increase in student loan debt, even compared to looking at auto loan debt, credit card debt, student loan makes up the majority of debt in households over the course of the last 15 years. And this high student loan debt is preventing certain populations and generations of folks from being able to move forward with other dreams. Namely, I'm looking at here like a mortgage. You know, there's a huge generation of people right now that are paying back student loan debt and maybe can't afford to do student loans and a mortgage. Definitely not unattainable. Please don't think it's unattainable. It is absolutely possible to pay off your debt, to be able to buy a home and to move forward. But there's a huge number of people in our society right now who are struggling with that. And that's something that the FEC, for example, is here to help with and here to give you tips and tricks. But you'll see that student loan debt is an increasing burden in households today. So the first thing we wanted to talk about today are knowing your options about how to pay for school. There are several different ways. We're going to talk about some of them today and share out some sites that we really like. So I'm going to toggle just another poll here just to get you all thinking about how many of you have talked through with a family member, a friend, you know, an extended family member, a professional, anyone who's talked through some of your options to pay for college. So I'm going to go ahead and launch this third question here. So you all should be seeing that on your screen now. And I just want you to think through like what situation best applies to you in your life right now, if you're someone who's applying for school or thinking about it.
Or perhaps like helping a child in your life think about school too.
Yep. No matter if you're the adult or a parent or a student, you know, whatever role you're playing, we're just curious to know kind of where people in the group stand. Okay. So I think most of our attendees have answered at this point.
Mm-hmm.
I'm going to go ahead and end this, and I'm going to share out the results for where we're at as a group here. So it's looking like a few people feel pretty confident that they have a plan, but generally speaking, quite a few of us are also looking for more information, which is part of what we're going to talk about today. You know, no one checked that bottom box, but I wanted to say for anyone who feels like they might be in that bottom box, that's absolutely okay. This is a confusing process. There's a lot of information to sort through. So no matter where you fall in these three results, you know, it's okay. And we're going to kind of talk you through what your options are today. So to preface this, I'm going to say that there are about three main ways to pay for school. The first one is going to be through grants and through scholarships. And so, you know, grants are typically based on financial need. It could be dependent largely on the income within your household. So it could be what your parents are earning. And scholarships are merit-based. Oftentimes they're based on your grades or your academic performance. Sometimes they're tied to extracurricular activities. There are also scholarships out there for things that you wouldn't even think about. Like I learned about a scholarship last week for people who are left-handed. There are scholarships available. This isn't even based on grades that you've necessarily received, but there are also scholarships available, you know, depending on what you want to study. If you're going into a specific field or you're interested in maybe something relating to biology or a certain language or something, there might also be scholarships available for you there. We're going to talk a little bit more about grants and scholarships, but I think the key takeaway to know for this first pillar is that grants and scholarships typically do not need to be repaid. That is money that is provided to you that you really don't owe back. You know, so that's helping to offset whatever it is you're going to be paying back for your education. The second way is through student income and savings. And I know some of you might be thinking, student income, you know, we know a fair amount of people, and there are kids out there who've been saving. You know, maybe they have a savings account, maybe they're working in high school or something like that, and they're building up a little bit of amount of money to be able to put toward financing their school. We think that's great. We realize not everyone's in that situation. So then we have a lot of students who borrow, you know, keeping in mind that loans are in the student's name. You're applying through a process that involves your parents, but these loans come out in your name. You know, I have student loans, I have federal and private loans, which we'll talk about. I think actually most of us in our group here, at least, have student loans. So there's also the combination though of parents or other relatives, any income or savings that they might have. You know, just in our experience as counselors, we've seen kids whose grandparents set up a college fund for them, or maybe an aunt or an uncle or an honorary family friend, someone set up an account for them in their name to help them pay for college. But then your parents and other relatives also have the ability to borrow loans to help offset the cost of school for you. And so we're going to kind of break this down a little bit. I will say that for most borrowers or students looking to go to college, they're using some combination of the three of these options to pay for school. You know, that's what they're doing to finance their education. It's very rare that someone falls into one of these boxes really neatly. Usually it's a combination. So the first point that I want to make, and I can't stress this enough, is that you have to do your research. And that's part of why we're here today, to try to provide some education. But every single person has a choice about what they can do to pay for college. And that choice is going to help you make the right decision for your situation. You know, everyone is different. So talk to your family, talk to your friends. It sounds like in our group here, a lot of you are already doing that based on that poll we had a little bit ago. You know, reminding you that grants and scholarships don't need to be repaid. And there are several options: national scholarships, state scholarships here for Pennsylvania, local scholarships for Pittsburgh, even based on your school district. We're going to talk about scholarships in a second here, but every single scholarship has an application deadline. Do we have anyone in the room who is looking to go to college starting in August or September?
Feel free to put something in the chat.
If you can put something in the chat, or someone can unmute themselves if they wanted to, but I'm just curious if we have anyone who's going to be looking to start school in the next few months.
You could also just do a thumbs up reaction if you don't want to voice it.
Yep, anything. I'm just curious to know. But just to say, most grants and scholarships do have application deadlines. And so that's what I wanted to touch on, because if you are applying for school for next year and you're still looking for additional funds, you know, make sure to pay attention to those deadlines. And to borrow only what your future earnings will allow you to repay. I put this out here so it's in your mind. We're going to touch on this later in the presentation. You know, but a big part of taking out loans is knowing that you're going to have to pay them back. Mm-hmm. Yourself into a situation that's going to be unsustainable. And so and this is specifically from a grants and scholarships point of view, we wanted to share some options that are going to get you started. So these are some sites that we've recommended to people and that we've, you know, kind of directed folks toward: scholarships.com and fastweb.com. We are going to share out this presentation after the fact, and these are hyperlinked. So you'll just be able to click on these and go directly to those websites. They have great listings of grants, scholarships that are available, you know, around the nation, and that can be broken down. So check those places out. Like I said, scholarships for left-handed people, grants. You never know what might be out there that you could qualify for. There's what's called the College Scholarship Service. This is a service that requires you and typically your parent to create a profile, and there is a fee to register, but there are ways to qualify for a fee waiver. And this is a great resource for undergraduate students, graduate students, professional students, someone who might be working and trying to go back to school at the same time. So I just wanted to put that out there, that there is a way to register for that. And then one resource that we learned about through the FEC is JLV College Counseling Newsletter. This is a woman who sends out this weekly email in newsletter form, and I'm happy to share it with anyone in the group. She puts it together for free, and she asks if anyone, you know, would be willing to Venmo her money to buy a cup of coffee. That's what she's looking for in return. But she takes the time to compile, both within Pittsburgh, Pennsylvania, and then nationally, any scholarships that are coming up that week that have a deadline. So you get it every single week, and you can see this is what's expiring, this is what's coming up. It is a fantastic resource that I think not enough people know about. And so I included the link here on the screen, but again, we're going to share this out. Get yourself signed up for her newsletter. Have it come right to your email address and just see what's available if you're looking to fund, to learn about some grants and scholarships that are open. You know, and then just to kind of preface the rest of the discussion, just because you're approved for a certain amount of money doesn't mean that you need to take out that full amount. And to give an example, you know, you might be approved to take out $50,000 in loans, but if you decide your school's only going to cost $25,000, don't feel like you need to accept that full $50,000, because you'll have to pay it back. And it can be so nice to have extra money to live on. You know, we're going to talk about how to budget while you're in school, but at the end of the day, this is money that you have to pay back. So we really want people to do their due diligence in advance and kind of know what's the right amount for me to borrow. What kind of budget would I need to have in mind when I'm getting ready to apply for financial aid and pay for school? So we're going to talk on that, but this is just something that we want to have in your minds as we're going through what we're going to be talking about next. So Alicia's going to take over from here and talk about the borrowing basics.
All right, cool. Thanks, Becky. Yeah, so we're just going to dive in now into like, what are the different types of student loans? And to begin it, if I can get next slide, Becky. Thank you. Another poll, so just a quick check. So this question is, how much does the average borrower owe in federal loans? So
Alicia, I can toggle this. Can you toggle this, or do I?
I think I can do it. Let's see. Yes, and I'm gonna launch it. Cool, thank you for bearing with us. This is our first Zoom polling experience. All right, good, we're getting some answers. All right, I'm gonna end it and share the results. Kind of like, so we're gonna go, what is the answer, Becky? Bam! Like we saw in our previous polls, participants on this call are like have like some good knowledge about this subject. So good job. Yeah, the average debt, and this is just federal loans, so this is not including private loans, which we'll discuss coming up. So yeah, after finishing a 4-year degree, the average is $33,000. Now, thinking back, we mentioned the average cost for a year of school was in that 23 range. So you're thinking, just like tuition, room and board, it's almost $100,000 to get a 4-year degree now, which is really crazy. So just, yeah, those are some big numbers thrown around. So, all right, next slide. All right, yeah, and so like I mentioned, in the student loan market, the vast majority of loans are federal loans. So those are loans that are given out by the federal government. As you can see on this pie chart, within that already vast majority, the biggest slice of the pie is direct loans, which are the only loans that are given out currently. All new loans originating from the federal government are part of the direct loan program. These two smaller federal chunks, which are the Perkins Loans and FFELP loan programs, those are older programs that both stopped in the past decade. So they're still on this student loan market pie chart because people still have them and are still paying on them, even though they have since ended. And then you see this smaller piece of the pie up at the top, that's the private loan market. It is, again, one of the smaller sections of the pie, but it's not an insignificant number. Like, that looks like that is 113, I'm assuming, billion, if I'm doing my math right. Yeah, because that would be of the trillion, 1.5 trillion loan market. So that's not an insignificant number. So it's important to keep that in mind when you're looking at how much college is going to cost and how you're going to finance that. Next slide. All right, and so what we're really big in talking about here at the FEC, and just good advice in general when it comes to looking at loans for college, because those are things you have to pay back, is really like use as much of your federal money as you can first before looking at private lending. So big thing here, that first bullet point is max out your federal student loan options before, like take the most money there. And we'll have like a little tip for parents coming up soon that relates to this. Federal student loans, when compared to private student loans, have really good pros, including these fixed lower interest rates than private loans. They're set by the federal government. There is a range, but they are on the whole lower than what you'll get from private lending. No credit check is required. You find out your eligibility for loans from the federal government by filling out the Fafsa.
Which we'll talk about.
Yep, exactly. Repayment will start after graduation or once the student leaves school, so stops attending school, attends for less than half time, and after a short grace period. For direct loans, that's 6 months, most cases. And then another great option that private loans don't have, but federal loans do have, are income-driven IDR repayment plans, as well as loan forgiveness options. So good things to consider as you're looking at financing school are just starting to think about repayment, which is a big reason why we wanted to do this presentation today. Next slide. All right, we really like this little chart from the Student Borrower Protection Center because, like I mentioned, all federal loans are from the federal government, but they might be serviced by a variety of loan servicers, which are companies that are brought in to manage those loan repayment processes. So like you might get your federal loan through the federal government by filling out the Fafsa, and you can get that information at federalstudentaid.gov. But then once you receive it, you might have multiple loans that might all be with one servicer or multiple loans across multiple servicers. So it's really important, especially as you're leaving school and entering that grace period, to get really familiar with who's managing your loan and who you'll be sending payments to. And just like making sure your information's up to date there, especially if you're moving, that happens a lot after college, just to make sure you don't end up missing payments and then like going into delinquency or even default just because you weren't keeping track of all that information. So it's really important to like keep an eye on everything.
Can I just say here, Alicia, I had an example for myself personally where I had a loan that was a federal loan, and it was being managed through Navient. I had been making payments for a couple of years on that loan, and then it got sold to Great Lakes. And so one day what happened was I got an email just saying like, hey, your loan's been sold. And thankfully they had my correct email address because I didn't get a letter in the mail. I got an email. If I had missed that email and I would have continued been making payments, I would have missed a payment because I didn't know the loan had been sold. So it's so important to know who holds your loans, which servicer you're making payments, and that they always have your updated contact information. We'll talk a little bit more about that, but we can't stress enough people who we know who've missed loan payments because they didn't know that their loan was sold. And so they didn't know to make a payment to a new company. Think of it like when you are renting an apartment, you know, you might have a landlord, someone who owns the house, but they might have hired a property management company to manage the day-to-day. You know, so you might be making payments to a rental company, but they don't necessarily own that property. They just manage it for someone. That's sort of the role that servicers play for the federal government in managing student loans.
Mm-hmm. And Becky, that's like a really great point about email addresses, because I know when I was in college, I primarily used my Creighton email, but I didn't have access to that email after about 6 months after graduation. But I probably would have like initially put all my loan emails to my school email. So that's like a good thing, like kind of when you're looking at the end of college, creating that professional email that you use on job applications and resumes, that should also be like your student loan email. Make sure it's one you're gonna continue to have access to. Yeah.
Mm-hmm.
All right. So there are 3 main types of federal loans that are released today. It's the direct loan program, which is kind of like the overarching program, and includes like the majority of undergrad loans. Then there's also the direct plus loan program, which is primarily for parents and graduate students, and then direct consolidation loans. Today, because consolidation loans are something that happens later, and once you've already had some direct loans, we're going to primarily focus on just the direct loans and then direct plus loans. So, like I said, a direct loan is a federal student loan made directly by the U.S. Department of Education, and then plus loans are for graduate or professional degree students and parents. A nice pro tip about the direct loans is that all of them are eligible for public service loan forgiveness, which we'll talk about later, and income-driven repayment. So those are like nice bonuses that you don't get with private loans. All right, and then a big difference, and something a lot of people notice right away when they apply for aid, is the difference in direct loans between subsidized and unsubsidized. So this, the subsidized thing is that it is subsidized by the federal government, which means the federal government pays interest on the loan when the student is in school, as well as during grace or deferment periods. Unsubsidized, on the other hand, interest will start accruing as soon as that loan is taken out. So even though when you start school, say And there's also a caveat here with the CARES Act legislation related to COVID-19. But in regular times, when there's not this public health emergency, these two main differences stand. Unsubsidized is that it starts accruing interest as soon as that loan is signed and is like in your name. You aren't required to make payments while you're in school or during the grace period after graduation or during any sort of deferment. And there are different types of deferment, but like you can qualify for deferment due to economic issues, like if you lost your job or experiencing some difficulty like that. I'm jumping ahead in a little bit, sorry, just to explain this little part. And other deferments like that. What the catch with COVID-19 is that right now, all direct loans have 0% interest. So that means if you start school in August and take out a direct loan, even if it's unsubsidized, no interest will accrue until the end of September. That ends on September 30th. So that's something that's happening in the current legislation that affects not only borrowers already in repayment, so after school, but it also affects new borrowers who will be starting school or continuing school in the fall.
I think just one thing to touch on here, Alicia, is to give that example for unsubsidized. You know, if you took out a loan for $10,000, you know, when you graduate for an unsubsidized loan, the amount of money you owe is actually going to be higher than that because it's been accruing interest the entire time. So don't be surprised when, depending on whatever interest rate, maybe it's going to tell you that you owe $12,000 or something, depending on the interest rate, right off the bat. Simply because interest was accruing, you are going to owe more money than what you initially took out versus that subsidized loan where the government had been paying it. So if you took out $10,000, your first bill is going to show your outstanding balance as $10,000 because you were in school during that time. You know, so that's the difference between subsidized and unsubsidized. And it's good to know what those mean because they're listed as such on your balance statement for your loan. It's going to break down your subsidized loans and your unsubsidized. So we want really people to be very clear on the difference between those.
And a nice pro tip here, I think we might mention it a little bit later too, but just to reiterate, what you can do, even though you're not required to make payments while you're in school, if you can afford to pay even the interest on your subsidized loans while it accrues, what's nice is you can, that way paying your interest on your unsubsidized loan, so instead of getting that bill for $12,000 when you graduate, it'll just be $10,000 because you've been able to pay that interest during school. That's something that really depends on your budget and your ability to pay, but it's a good thing to consider if you can do it because that'll end up saving you money in the long run. Next slide, cool. All right, like I mentioned, Direct Plus loans, there are two of them. Parent Plus loans are the main ones you're gonna see for undergraduate students because they're taken out by the parents for their students. And then graduate students can also take out Plus loans. So these loans, fixed interest rate, but not subsidized. So they're all unsubsidized. Direct loans directly for the student, for undergrads, that's where the subsidized and unsubsidized comes in. Also, Parent Plus loans, as they're traditionally written, have no grace period built in. But we learned, or Becky learned through research recently, that while you're signing the promissory note, so when you are actively starting that loan, when you apply for it and sign at the dotted line, as it were, you can ask for a grace period. It's not guaranteed, but it might be something to consider. That will give you maybe 6 months when after your student starts college before you need to start paying on it. And also payments begin as soon as the school receives the funds. So for Parent Plus loans, unlike Graduate Plus loans or regular direct loans where you don't have to pay during school, the in-school deferment, you have, for a parent, they have to start paying on it right away. All right, but you can request from the school a delay to not pay on the loan while your student is in school. Another pro tip here we heard from someone who works in financial aid at Duquesne is that, so say your student needs more than their federal loan allotment that they got personally to afford to go to school. Something a parent could consider, there is some risk involved because the parent would be taking it out, but it might be worth the parent taking out a plus loan even if they intend their child to help pay that loan. The reason we suggest this is that PLUS loans, because they're from the federal government, they end up usually having a better interest rate than a private loan, and also have a lot of the protections and also benefits like income-driven repayment built into them that private loans do not. Like, what's nice about the CARES Act is that we do have this suspension of payments for 6 months and 0% interest. You don't get that with a loan from like Discover Bank or Wells Fargo. So something to consider in order to save a little money would be like maybe a grandparent, a guardian. I'm not sure if grandparents can, I should, before I like speak too far, but I know like a parent or guardian definitely can take out the PLUS loans. It might be worth like a parent taking out that loan to get those built-in protections, to get that potential grace period if they apply for it, with the like agreement with your student that, hey, you're gonna help pay for this once you graduate. We're doing this to get you a better deal financially, but I need to take it out in my name, so it's affecting my credit. But like have that conversation with your like the student in your life, and that's a great way to like save a little bit money, and also stay away from those private loans, which have a lot of drawbacks.
Yes, we're going to jump to private loans in 1 second, but I just want to reiterate for the Parent Plus loan. You know, to give an example, we have people who've come to the Financial Empowerment Center, and they are parents who are in their 50s or 60s. You know, their kids are maybe graduated from school in their 20s or 30s, and those parents took out Parent Plus loans. And here they are, you know, looking toward retirement, and they are struggling to pay back these loans because their students, their children can't make payments on them. So the biggest thing there is, if you are a parent and you are considering taking out a Parent Plus loan, it's in your name. It is your responsibility. It impacts your credit. Just know to have that discussion with the student in your life to know what is our plan to pay this back. Whether you as a parent are doing it on your own, or you're doing it with your student, or your student is doing it entirely on their own, make sure you know what you're getting into. I can't tell you the number of people we've talked to who have Parent Plus loans, and they are, you know, thinking toward retirement, and this loan is preventing them from really being able to move forward with that. So just know that Parent Plus loan is in your name as a parent. It is not your student's responsibility. You know, so have that conversation and kind of decide what's going to be feasible for you. We actually got a question in the chat, Alicia, so I'm going to put this out to you. And it says, if I plan on working while I'm in school, can I start to pay some of my loan? And if so, will I have to continue paying it once I start paying it?
No, that's actually a great question. You can make payments. You're not required to make any payments because you're in school deferment, but it's kind of like, so some of our clients at the FEC, they're benefiting from the CARES Act, this administrative forbearance we're in for 6 months, but they can still afford to pay. So they can pay. And what's really great about that is they can start chipping away at that principal, especially now with no interest accruing. Your payment goes completely towards the principal, which is really awesome. So yeah, you can pay, maybe like if you have like a job over Christmas, maybe you'll make a payment then, but you don't have to continue paying after that. You're still in that deferment. It's just like an extra bonus payment.
But anything we can do to chip away at that balance is always helpful. So if you're
exactly.
while you're in school, either as a parent or if you have a student, if you can pay off some of that, you know, that's a great, not everyone's in that position, but if you are, it's definitely something to consider because it's going to make it easier when that student is out of school. So we're going to head right into private loans here.
Yep. All right. Again, we cannot stress this enough. Consider using other financing options before private loans. They are there. They are like good in that they're there when we need them, but you want to exhaust all your other options before jumping into the private student loan issue at all. So for them, they're made by a variety of lenders. They can be made by banks, the schools themselves, other private lenders. Another big thing here that we've like mentioned a lot and we just continue to stress, they do not offer the same protections that federal loans do, or even some of the same like benefits like income-driven repayment plans. Usually have higher, sometimes variable interest rates, no forgiveness. And also because of bankruptcy legislation in 2005, student loans as of right now cannot be forgiven in bankruptcy. So these are things that are with you for the long haul. So you definitely want to keep them smaller. and minimize them at all costs. Another big thing here, they often require established credit. I learned on a webinar this week that 90% of private loans require a cosigner. So this, like Parent Plus loans, just a big reminder that this is on your credit as a cosigner. So if the primary borrower, the student, doesn't pay, it's on you to either help with that paying or or see your credit suffer. So this is another big thing we see at the FEC with those parents who are in their 50s, 60s looking towards retirement. Not only if they check out Parent Plus loans, but if they co-signed on private loans, it's a big issue. And also often higher fees, shorter repayment terms, usually no sort of deferment, primarily forbearance, and it's usually shorter, has other requirements. So again, they're kind of a last resort. They are there because school in the US is really expensive. So they are here when we need them, but we want to try to minimize the use of them as much as possible.
And just to give a personal story there, this is Becky again. I have a combination of student loans. I have federal student loans and I have a private student loan. I remember I took out this private student loan for grad school and I didn't need it to pay for the actual tuition. I qualified for federal aid for that. But what I needed it for was to live on. You know, I said, yes, this was what brought me to Pittsburgh. I'll say, I moved to Pittsburgh to come to grad school at Pitt. And I said, I have my tuition covered, I have my books covered, but I need a loan to live on. And so, you know, this was back when this was like 15 years ago. I'm aging myself. This was like 13 years ago. I didn't know much about student loans. And so I found this loan through Wells Fargo, who was my bank at the time. And it was called the Education Connection Loan. And I remember thinking like, wow, what a great name. This is really going to fill the gap for me to pay for school. So I took out this loan. My mom was a cosigner. And I was grateful that my mom had the ability to co-sign that loan for me. You know, we recognize that not all students have a parent or a guardian who's going to be able to co-sign. And, you know, not all parents are going to be in a position to co-sign for their kids because of their own credit situation. So we recognize this is not, but that's what shuts people out of this. There are no people who haven't been able to go to school because they have exhausted their federal funding and just still couldn't bridge that gap. You know, we're happy to talk to anyone in that situation and see what we can come up with in terms of ideas. But, you know, when it came time for me to pay that loan back, I'm still paying that loan back. It's been, you know, 12 years. I still have a pretty big chunk of money that I'm paying on there, but I'm determined to make that payment because I do not want it to fall to my mom. My mom is retiring in July, and I want her to be able to retire. You know, I would hate for me to not be able to pay this loan and to kick to her, and, you know, that puts a financial strain on her too. But so, again, as we talked about earlier with those Parent Plus loans, if you are a parent and you are going to co-sign a loan, have a discussion with your student. Figure out a plan for who's going to be responsible for paying this because it's in both of your names. You know, we've had people come to the FEC, students who can't make their private loan payments. You know, maybe they're not working, they're not earning enough money, so they chose not to pay it. That is also destroying the credit of their cosigner if their cosigner is unable to pay. So have a discussion as a household, as a family, make a plan for how you're going to pay these loans back and be upfront and honest because you're going to save yourself a lot of heartache and trouble down the line if you have a plan. I just wanted to stress that enough. I also will say that 12 years later, I removed my mom as the cosigner. It took me about 5 months to do, but I had made enough payments on my private student loan. I contacted Wells Fargo and I said, I want to refinance this loan in just my name. So my mom is no longer responsible. And I was approved. That was a big step for me as an adult to not have my mom be responsible. And it's funny, I called her on the phone and I said, Mom, I removed you as the cosigner. And I thought she'd be so happy. And she was pretty like, cool. And that's all she said, you know, but I felt really proud of myself because I feel like I took control of my financial situation. I'm paying that loan and I relieved some of that burden from a family member whom I love. And so, you know, just because you co-sign a loan doesn't mean you're tied to it forever, but know that you're tied to it for a period of time until your student is able to do it on their own. So again, private student loans, we just want people to know what they're entering into with this.
And also just a good point, because I know we didn't stress it and it can be a little confusing. For private student loans, because they're primarily in the student's name, usually repayment isn't required until after graduation, unlike Parent Plus loans where repayment is usually after graduation or after a student drops below half-time, depending on what kind of provisions the loan has. But that's just something good to keep in mind with a private loan if you do have to go that route. For kind of like the chart we had for federal loans, you can kind of see private student loans, some go directly to the student. So like if you borrow from Discover Student Loans or Sallie Mae, you borrow and they are also the loan servicer. Other organizations like SoFi or Citizens Bank use a third-party servicer, which is kind of like what the federal government does. Again, just another thing, like know your servicer and keep an eye out for servicers changing. The student loan market, loans get sold all the time. There's like no guarantee you'll be with the same servicer. And it especially happens early on, like right after you graduate. I feel like in that first year, a lot of loans will get moved around. So something good to keep an eye on, just the same with federal loans. All right, and again, just like doing your research, having that plan, having those discussions, we cannot stress this enough, which is why we say it all the time. Exhaust all your other aid options, especially the free aid of grants and scholarships and federal student loans before doing private student loans. Help offset costs by like living with roommates, part-time job, working in the summers. Ask if you qualify for work study. Another bonus here with the CARES Act provisions is that work study, you are eligible for your full award even if your campus closes in the future. Say we have another, hopefully we won't, but another coronavirus issue maybe in the winter and your college campus closes and you can no longer work your work study job, you are still guaranteed to get your full award from the federal government due to provisions in the CARES Act if an emergency situation arises. So that's like a nice thing to just keep in mind. Yeah, budgeting, planning, that is such a key thing. And then also keep an eye on how much debt you're accumulating over time. Because school is expensive, like we mentioned, that $23,000 mark, you're gonna like take out loans every year maybe. Maybe you won't take them out the first year because you got a good scholarship, but maybe like for your last few years, or if you're like me and you have to take a victory lap semester and graduate a little bit later than you originally planned, that's when was for my victory lap. So yeah, sometimes like you've exhausted all of your scholarships, which is what I did, and my federal aid just didn't cover that last semester, so I had to take out a private student loan. But it's good to like keep that in mind because you're gonna start paying on all of that debt when you graduate, not just like part of it, the whole shebang.
Yeah, and we can't stress this website at the bottom enough. We have a lot of people who come to the Financial Empowerment Center and they have no idea where their there are people who just haven't paid, right? Your student loans came, maybe you moved, you didn't get the bill in the mail. They come to us because they pulled their credit and they saw, wow, I have all this stuff on my credit report. My credit is in the toilet because I didn't pay on my student loans, but I have no idea where to start. I don't know who's holding them. I don't know where to pay. I don't know where they started. This website at the bottom, the National Student Loan Data System, is a fantastic website because it tracks your student loans over time. We can't stress enough the importance of this website to go in and know where are your loans, who's holding them, who can you expect to be paying. You know, if you haven't logged into this system, log into the system. And, you know, the FEC can help with that. We've kind of introduced this website to a lot of people, but it can be really helpful in organizing your loans and then making a plan to pay them back. And these things we talk about budgeting, we're going to touch on that next because our next topic is the loan process. You know, we talked a lot about the different types of loans, but now for some of you, you might be ready to actually apply. And so, you know, how do you do that? How do you know if you're eligible and how do you apply? So the free application for federal student aid, also known as the Fafsa. The Fafsa helps your school's financial aid office, you know, determine how much federal aid you're going to need. This is in the form of grants, work study, which Alicia mentioned earlier. I will say when I went to college, I had work study all 4 years of college. So I worked in our international programs office, but I was able to earn a little bit of money while I was going to school. And that was really great. You know, I was able to put that toward other costs that I had while I was going to school. It is so important. So I've listed the website here, studentaid.gov, but where you can apply for FAFSA, this is so important. The keys for the FAFSA: apply even if you think your family income is too high. You just never know what you might get. So even if you think, we hear that all the time, right? Oh, I know I don't qualify for the FAFSA. Apply for the FAFSA, even if you're not sure. You just never know what's going to happen. And you have to resubmit the FAFSA every single year. So we encourage people to apply as soon as possible once the FAFSA opens, and to get your application in right away. And when you're applying for the FAFSA, you might be a high school student who's applying for the FAFSA for that first year that you're going to go to school. You might not even know where I'm going to go to school yet. I haven't done my applications. When you're filling out the FAFSA, you're able to send your application to all of the schools you're thinking about. It doesn't matter if you've been accepted to that school. It doesn't matter if you've even applied to that school. Send it to every school you're thinking about. Those schools can't see the other schools you're sending it to. So if you send it to Pitt, and then you send it to Penn State or what CCAC, like, they can't see the other places you've sent it to, so they have no knowledge of where else you're applying. They only know that your application for financial aid got sent to them. And so every school is going to tell you what you qualify for to come to their institution based on financial aid. The deadlines for FAFSA vary by state. We encourage everyone, depending on where you're at or where you're going, to make sure to look at those deadlines. And every year when you recertify your FAFSA, double check. It pre-populates from year to year. Sometimes our taxes do that too, right? Make sure you're checking. Did my address change? Did my email change? Did my phone number change? We've seen a lot of people get rid of landline phones in recent years, and their FAFSA application had a landline phone number that no longer exists. Update that to your mobile number. Just make sure to check that population that is repopulating every year. And one of the questions we get a lot at the FEC is like, how do I get help filling out the FAFSA? There's no really truly strong entity that will help guide someone through the FAFSA process. So some of the suggestions we've made, if you're a high school student, FIA will send someone to your guidance counselor at your high school, or a professional at your high school can help you guide through the FAFSA process. So if you're in school still, talk to your guidance counselors, talk to the administrative professionals within your school. If you're someone who's no longer in high school, maybe you're going to college but you went a little bit later, or you're an adult who's just going to college several years after you've been in the workforce and you want help being guided through the FAFSA process, talk to a financial aid office. If you're applying to a local school, visit their financial aid office. We've gone, at the FEC, we've taken students who are going to CCAC. Maybe they graduated from high school a year ago, so they don't have that guidance counselor in their life. We've gone with them to CCAC's financial aid office and encouraged them to talk to someone there about how they can go about applying for the FAFSA. So when you're in doubt, call the financial aid office. Right now, we can't always visit places, but you can call. You can call and ask about what you can do to get help. And I think this next part is really important because FAFSA has made some changes due to the COVID-19 situation. So we might have some people in our room here who have already applied for the FAFSA and were awarded X amount of dollars. Maybe one of their parents got sick or was furloughed, or even some people had family members pass away whose income might have been contributing to what they were awarded in financial aid. Other families haven't applied yet, but they have immense need right now. So due to the COVID-19 situation, if you are someone who's already applied for financial aid or you haven't yet applied, you can't change the FAFSA once it's been submitted. But what you can do is contact the financial aid office at a particular school that you are looking to go to and explain your situation. Explain if you were impacted by COVID-19. If you're applying right now, it's based on your 2018 tax returns. Like right now, the FAFSA is based on your parents' typically 2018 tax returns. In 2018, coronavirus wasn't a thing. So any of that income reported in 2018 might not be relevant to your situation right now. So again, if you were impacted or you have concerns about this, you could qualify for more aid. But it is a matter of contacting that school, talking to their financial aid office, explain the situation, and then ask about what documentation you would need to submit to show that you've been financially impacted. The other thing that we want to mention here is that schools often have pools of scholarship money that goes unused every year. They might be, right? Like Alicia wants me to mention this too. They might be small money. So for example, Pitt has a bunch of scholarships available by department. So if you're planning to go to Pitt and you want to study in a specific department, maybe you want to study a language or something related to mathematics, that mathematics department at Pitt might have a pool of scholarship or grant money available to give to students who are coming in as freshmen. They don't really advertise that. The only way you find out about that is by going to the school and talking to that particular department. So if you're a student who knows what you want to major in and you have thoughts about that, go talk to someone in that department at that school, find out what might be available. All these little bits of money can help to offset the cost of school, but it does involve talking to someone. You know, and people don't always know about these. You know, you might not know that there's a scholarship available if you want to study anthropology at whatever, Pitt, Duquesne, CMU. You know, you only find that out based on going and talking to someone in that school or reaching out virtually right now, since we can't always go to school. But we just wanted to put that out there because it involves a lot of proactivity on your parts to make sure that you're getting all the information you can get and knowing what your options are. So in just, again, going back to these loans, we have loan eligibility, federal loans, private loans. Those federal loans are based on need. That's based on income within your household. Every time you fill out the Fafsa, you are assessed based on the need within your family, and it's also tied to your grades. You know, if the federal loan is looking at what kind of student do we expect this person to be? Are they going to come to school? Are they going to participate? You know, they're constantly making changes, though, to the federal loan process for COVID-19. So that's why we wanted to put this little stamp disclaimer right there, because changes are always happening. You can visit the studentaid.gov. They're trying to put a COVID-19 banner at the top. You can come to the FEC. We're happy to share what we know. But just know that changes are being implemented. For private loans, in terms of loan eligibility, remember, Alicia stated that fact, 90% of the time, you are gonna need a cosigner to fill out that private loan application. So if you don't have a cosigner in your life, you know, let's talk about what your other options might be. That for a cosigner to be approved, what they're looking at is the credit. So when you are going to apply for a private loan as a student and your parent is gonna be a cosigner, they're pulling your parent's credit report. It's directly tied to their score and their credit history. They're also gonna focus on your career plans. You know, people, believe it or not, people look at what does this person wanna do and what is the likelihood that they're gonna find a job in that field. You know, they wanna make sure that you're gonna have the ability to pay that loan back. And a private lender has whatever discretion they deem necessary to make a decision about this. So they might say like, ooh, you know, you're going into, I don't want to disparage I don't ever want to disparage anyone's dreams. So I'm not going to give an example there, you know, because I want people to do whatever they want to do. But think through, what kind of career could I have after this? What do I want to do? What is the likelihood of me finding a career in that field? Private lenders might look at how long you're going to be in school and other debts that you have. You know, if you're an older than average student, you might have credit card debt. Your parents might have credit card debt. You might have a mortgage. All of that gets weighed against that lender's ability to want to give you a loan. So again, federal loans and private loans are really different, but it's just good to know what makes you eligible for each one. The last thing, I realize we're getting close to time here and I want to be aware of that. So if anyone is able to stay with us a little bit longer, I'm going to speed through, and Alicia's going to talk about repayment then. But one of the biggest factors that schools look at, or that you should be aware of when you're thinking about your loan, is your debt to income ratio. And what we mean by this is you don't want to borrow an amount that's not going to be possible for you to pay back once you graduate from school. And so what you're going to want to do is calculate, what is my debt? What is my income going to be? And what percentage of the debt is that in comparison to my overall income? As a general rule of thumb, you don't want to pay more than 15% of your income. So if I'm making, you know, just to give a nice round number, if I'm making $1,000 a month, you don't really want to be paying more than $150 on your student loans, because it's not going to be feasible beyond that. And we're going to have some tips and tricks here left to help you understand kind of what we're talking about. I'm going to come back to that slide, but I want to jump to this because I just talked about it. So when we talk about, I put these examples in just to give a sense of, from a budgeting standpoint. Some of you might be thinking like, wow, how do I budget this? You know, 15%. So if we look at this example on the left here, a general rule of thumb for budgeting is a 50-30-20 rule. You always want to budget for your basic needs, you know, and it lays out what these are: your housing, your rent, your food, your groceries, transportation, things that you have to pay in life, 50% of your budget. And then we have your wants, you know, dining out, shopping, entertainment, the most up-to-date technology, whatever that means. The FEC is happy to help anyone kind of think through their needs and wants. Believe it or not, this changes for everybody. You know, and as someone's need might be another person's want. So this is up to you and your spending habits, but then also your loans. And you'll see loan repayment falls into this savings option here. It's within that 20% of your income. You know, you're accounting for your loan payments here. And on the right-hand side here in this chart, we have an example of, this was taken from business finance, but they gave an example of someone. So you'll see that in this second category here in fixed expenses, they accounted for all of their student loan payments. They have a Navient private student loan, Earnest private student loan, Nelnet. They have a lot of different student loan providers, but you'll see that that's totaling under 15% of their income. That's great. That's where we want someone to be, 15% or less. Most people fall within 10 to 15% of their income is going towards student loans, but when your student loans are making up 25% of your monthly income, that's going to be a problem to sustain, and it's going to result in you either needing to find more income or cut out some of your expenses. You know, we have that conversation at the FEC daily, Alicia, would you say?
Yeah, because that's a big part of it.
Yeah, as Alicia said earlier, student loans do not go away. You can file for bankruptcy. Your student loans are still going to be there on your credit report. They do not get discharged. Student loans follow you around for the rest of your life, and so it is so important to address them, to be on top of them, and to make room for them in your monthly and yearly budgets. And, you know, we can help anyone with that, but we couldn't stress that enough. And so in just jumping back, you know, if you're going to be taking out loans, some things that we just want you to consider: borrowing only what you need. Just because you're approved for X amount doesn't mean you need to borrow it. Think through what you're going to do in terms of a career, you know, make payments, build that budget, figure out if you're able to make payments while you're in school. And then remember, these loans are in the student's name, with the exception of that Parent Plus loan. You know, but so as the student, this is going to fall to you to be responsible for that. So in going forward, we just had, from this page, what I really want the takeaway to be is our pro tip here, and that there are tools that can help you. So some of you might be thinking, how do I know what an expected income is going to be in my career field of choice? You know, there's this great site that we found called myplan.com. It gives a bunch of average salaries for different career fields to help you know what you might expect to earn in that career field. Also, it's good to know what is the cost of living where I'm going to be going to school and working. Pittsburgh is a relatively affordable city. You know, not if you're going to be living in San Francisco, the cost of living in California is a lot different than the cost of living in Pittsburgh. So know that your income here might not get you as far if you're living in California. CFPB, the Consumer Financial Protection Bureau, also has some great tools. So we just wanted to put those out there so that you have them at your disposal if you want to find out kind of what you can expect to earn, and then how you can build a budget based on those earnings. Oh, lastly, this is a great point. Anyone considering school, a lot of campuses, we put out some local ones here, they are doing virtual open houses. You know, typically if you're a student, you get to go visit colleges and you get to see what they're offering. We can't go to college campuses right now because of COVID-19, but you can do virtual visits. And so we put out some here for local universities at Pitt, CCAC, and Point Park. So we encourage, if you're looking at a specific school, find out if they have a virtual open house option. You know, you can tour their school online, you can learn about what they're offering, but they've made these great interactive tools knowing that we can't all just go out to college campuses right now. So we just wanted to put that out in the wake of COVID-19, that is an option. And we're gonna wrap up with a little bit about repayment here.
Yeah, I'm gonna breeze through this because it is kind of like something you'll be thinking about a little bit later, but to kick it off, we have another poll question. So true or false? I'm gonna launch it. I don't have to worry about making federal or private loan payments right away when I graduate because I know there'll be a grace period. Let's get this. Okay. All right. And I launched it.
So if anyone has thoughts, feel free to throw them out.
Yeah, that's a good one to see if you were paying attention.
Yes, like a test your knowledge kind of thing. Sometimes we put quizzes at the end of our presentations, guys. We didn't today, but you know, it's been known to happen in the past at the Financial Empowerment Center.
All right. Well, it looks like got some smart cookies like we've been mentioning. Correct. The answer is false, right? Because those private student loans usually don't have a grace period. And Parent Plus loans, like, you got to start paying on them right away unless you make some sort of arrangement. So, yeah, good job all. All right, jumping into the next one. This, another, like, we just like this chart. It's from the Student Borrower Protection Center. They've been really good. Lots of information about, like, especially the CARES Act legislation, because that created a lot of change, but like, it was good to have experts in the field to help us. Kind of the life cycle of a federal student loan, it gets dispersed. So that's when it gets paid to your school or you for tuition. When you're a graduate student, usually you'll get whatever's left over to help you pay for living expenses. Usually in undergrad, it goes directly to the school. Federal student loans, for ones that are direct loans given to students, when you're in school, that's in-school deferment. So you don't have to worry about paying, but you can pay on it. And you also don't have to make, like, commitment payments, like that question we had earlier. You can pay once, and then maybe you're not working anymore, and then you don't have to worry about paying it until after you graduate or leave school and after that grace period. Again, next part is that grace period, 6 months after you drop below half-time status. So that could include leaving school completely, or after you graduate. You'll have that grace period to, like, find a job, and then that's when repayment begins. And everyone, when you first start out, you're automatically put on a 10-year repayment plan. So for example, for my undergraduate experience, I had 2 private loans and then several federal loans. I was put on the 10-year repayment plan for all of them. I was working part-time when I first, like, got out. It was almost $700 a month. Not what I could afford. So jumping into repayment, the next slide. So let's talk about making sure those payments are affordable for you. That's a big thing. So here are some, like, just pro tips about this. So the third one is really, like, making sure that's affordable. Learn about your repayment options, especially for federal loans. We included this little chart here. Standard repayment, that's the 10-year plan I was talking about. That's what all loans automatically go on. But you have options, but only for federal loans. You might be able to build your own income-driven repayment plan with a private lender, but it's not likely and not common. So for the federal loans, standard repayment, if that's not affordable for you, if it's way over that 15% threshold, definitely consider applying for income-driven repayment or extended repayment, graduated repayment. These plans exist to make this sustainable for you. The federal government wants to get their money back, but they don't want it to be at the expense of you not being able to afford to live. So they built in these protections. Utilize them. That's what they're there for.
Can I just say, when I graduated from college and I had to pay my loans back, my monthly payment was about 25%. I was on the standard repayment plan, and I was paying, like, just over 25% of my income toward my monthly student loan payment. I didn't know back then about income-driven repayment plans. I didn't know that I could pay based on what I'm earning, you know, and so when I learned about them, I signed up, and we're going to tell you all about them. But again, I was in that boat. 25%, basically 1 week's worth of earnings was going just to my student loan payment alone, let alone my rent, my food, my gas, anything else, my utilities, you know, so that wasn't sustainable for me. And that's where these income-driven plans can be so helpful.
And then also just some other pro tips. If you can, like, if you can do an auto debit, that's not for everyone. We don't want anyone overdrafting accounts. But if you know you're going to be responsible enough and not have that overdraft, think about enrolling in auto debit, because that usually involves a slight interest rate reduction. Usually it's 0.25%, but that counts, especially when you're thinking about a large loan balance. And if you are making more money, maybe this is like a few years out after graduation, you're more established in your field, pay extra, especially towards private loans. But that's an important thing we're going to talk about in just a second. So I think jump to the next slide, which is about IDR. So the big thing with IDR is that monthly payments are based on borrowers' discretionary income. Discretionary income is the difference between your adjusted gross income, which is found on your tax forms, and 150% of the federal poverty guideline for your family size. So these amounts are set, and that way you don't pay more than a certain percentage of your income, which can be like 10% to 20% depending on the repayment plan. Another great bonus of income-driven repayment plans is that even if you still owe money after you've made 20 or 25 years of payments, the rest of that loan is forgiven. It might be count as taxable income in that tax year, but you don't have to worry about paying it. You might be bumped into a slightly higher tax bracket, but that's only for 1 year, and you can prepare for it as that comes. But it's nice. This is a great way, like, you've done your due diligence, you've tried, and the federal government's like, okay, we'll forgive the final amount of your loan balance. Also, forgiveness options. We talk a lot about public service loan forgiveness, which is currently offered for all direct loans, but it might not be offered in the future. So it's not something to bank on, but right now it is something to consider. If you're entering the public sector, so working for a nonprofit or working for the government, stuff like that, those are usually lower earning jobs, but they often require college degrees, which are expensive. So the federal government has built in this forgiveness plan, which is after 10 years of repayments, so not the 20 or 25, if you have documented that you've worked in an eligible field for 10 years and made 120 payments, so it has to be payments, not necessarily timeline, and we're on an IDR plan during that, the rest of your student loan balance will be forgiven and most likely will not count as taxable income. It'll just be forgiven after those 120 eligible payments. So this is something to consider looking forward, but it's not something to necessarily bank on.
We are on it. I will say, I'm on the public service loan program. I've worked only in nonprofits since I graduated. I've been making payments for about 6 years. So I have, if this program still exists, presumably I have 4 years of payments left, but on my federal loans, I still owe upwards of $50,000. That could be, if that money gets forgiven, if this program exists, I'm looking at loan forgiveness in the amount of maybe like $40,000, something like that. A big amount of money, because I've been working in the public sector, and I've been documenting that I work for a qualifying organization. So for anyone going into nonprofit work or teaching or government work, loan forgiveness can be a great option for you if you qualify, but you have to be on this income-driven repayment plan. It is so confusing to understand, and you have to apply for things separately. The FEC, we help a lot of people with understanding loan forgiveness, making sure they're on the right plans, and knowing how to talk to servicers about it. So if anyone wants to know more about this or has questions, please come talk to us. We're happy to give you some one-on-one help with that. All right, I'm gonna go to the next slide, Alicia.
Yeah, and actually if you want to skip through the next slide, because we'll just breeze over that.
Yeah.
The previous slide was just the 4 different types of IDR, but we're just gonna jump into more of the IDR tips and tricks right now.
This is our last slide, by the way. So this
yes.
is
We're doing good. We talked about trying to be done by 2:15, and I think we're going to make it. So lots of people, like both Becky and I, didn't get on IDR plans as soon as we should have, and ended up like spending way too much money on our loans, which good and bad. We paid more towards the principal, but at the expense of not being able to save as much. And saving is really important, especially in times like these where lots of things are not guaranteed. So it's important to like have that balance. Key thing, don't get misled by bad info. You have a right to make payments on your federal loans based on your income. If you're unsure about something, ask questions. Come see us at the FEC. We can help you with this. Recertify your income on the same date of every year. Don't miss that recertification date. It ends up being a bad scene and just comes back to bite you. If you miss that, you'll end up getting put back on the standard repayment plan. So, for example, this happened to me recently. There was a weird change when I moved my loans, so my IDR recertification didn't go through like it was supposed to. So instead of owing $0, I ended up, my bill was due for $500. And I was like, I can't afford that. So I had to call them right away, explain the situation before I had a delinquent payment, and they put me on an administrative forbearance for a month while my IDR plan got recertified. Sometimes that happens when loans get shifted around. So it's also good if your loan is going to a different servicer, make sure your IDR plan goes with it if you're on an IDR plan, or make sure call right away and be like, hey, do I need to recertify now since it's changing servicers? These are all important things to keep an eye on. Another key thing, beware of scams. Companies promise loan forgiveness and other incentives that seem too good to be true. They probably are. IDR for federal loans is done through the federal government and is free. It shouldn't be there should be no cost involved. Also, this is something related to private loans, but right now, if you refinance a private loan, that is also free, no cost. Like, you're getting a new loan, but there's no built-in cost there. So if there's something around student loans that says you have to pay for it, same with like applying for student aid, like doing the Fafsa, like that's not good. Definitely don't go down that path. It should all be free at this point.
And we say that because there are a lot of scams happening right now in the wake of COVID-19. Financial stress is at an all-time high nationwide. People are taking advantage of that. People know people are vulnerable. They're looking for ways to capitalize on that. You know, so it's free, know what you can be charged for. And we didn't touch on this, you know, we talked about it earlier, but private loans typically don't have these income-driven plans. If you have a private loan that you are unable to pay right now because of COVID-19, lenders, we haven't seen much at the FEC about lenders being willing to give like more than maybe a few months of a deferment for payments, you know, but even private loan lenders are understanding that people are out of work. We're at an all-time high for nationwide unemployment right now. The figures were released today. We're at about 20% unemployment in the country, which is insane. 1 in 5 people is not working currently. You know, if you have loans, the best thing always is to not do anything. The best thing is to call your provider. If you don't know what to ask or you're nervous, come to the FEC. We're happy to call with you. We're happy. Our services are free always. We're happy to call and have that conversation and learn about the questions to ask. You know, for COVID-19, anything, typically, whether it's student loans or credit cards, you have to specify hardship due to COVID-19. You have to say you've been impacted by COVID-19, and that unlocks some programs. But if you don't specify COVID-19, they're going to tell you there's nothing they can do to help. You know, so there are a lot of tips and tricks to keep in mind. But if anyone has questions, they can ask us now, or, you know, reach out to us at the FEC. Come in for a free financial counseling session, work with us. We're happy to answer questions or guide anyone through any financial challenges or any goals that you might have for the future. So, we realized we went a little over, and we're so thankful that everyone stayed with us today, but we wanted to just ask if anyone has any questions, or this was so much information. We know student loans are a doozy, but that we are addressing people's questions if anyone has any.
I have a question for you guys.
Yeah.
So when you apply for a income-based plan, and it takes your information from your previous tax return, correct?
Yes.
So what happens in the case that that's not necessarily reflective of your current income? Do you just stick with the prior return?
That's a really good question. So yes, it's usually factored by your previous tax return. I actually had this experience, but my income was significantly lower in 2019. And so you can like file a paper form with documentation of your income if it's not reflected in your taxes yet. Like usually they go with like the previous year. So for my case, they were going based on my 2017 taxes, but my 2018 taxes were significantly lower, and I had just filed them. It was April 2019. So I just submitted my more recent tax return and got it recalculated. But there are other ways to recalculate it by, showing your income. So like pay stubs, etc.
Yeah, even me, I remember the thing about being on an income-driven plan is it's only recertified once every year. You know, I'm that person I try to be pretty honest, and I had a point in time where I got a promotion and my income went up quite a bit from where it had been, and I thought to myself, I better do my due diligence. I better reach out and tell my loan servicer. At the time it was Fed Loan, and so I actually sent them through their website an email saying my income has changed for the good, like it's higher, but I want to know if that's going to impact my student loan payment plan right now because I'm paying based on a much lower income. And they actually wrote me back. This was in July of the time frame that I wrote this email was in July. They actually wrote me back. It took a couple weeks, but they said, thank you for letting us know. No need to report that change in income until December when it's time to recertify. So I had a period of time where I was making more money, but still paying based on a lower income, so I was able to save a little bit more, which was nice. Some people are on the reverse of that, where they're making more and then it drops down. Again, the best option is talk to your servicer, whatever your situation is, and ask them what their options might be. But you have to be willing to call. If you do nothing, you will find yourself in a very tough position.
And this is kind of it's a weird, the language is weird, is worded weirdly on the student aid government, but the main thing, like it says more specify if your income has decreased. They really want you to contact them because they don't want anyone to like go into foreclosure on their home because they're paying too much on their student loans. They want to get their money in the long haul, not necessarily like at the expense of you being able to live. So if you have an income decrease, definitely, and this is with all lenders, especially related to COVID, if you are unable to pay or unable to afford those payments, contact your lender immediately. Like just get those wheels turning sooner before you go into any sort of delinquency or default.
And to say, that goes for any payment. Today we're talking about student loans, but if for COVID-19, if you were impacted because you can't pay your mortgage, you can't pay your credit card, you can't pay medical bills, if you have any outstanding debt that you are unable to pay due to a change or a decrease in income from COVID-19, the best option is to call. This is a global crisis, and nationwide options have been made available to people to prevent them from losing their home or to prevent them from being evicted, things like that. So it's really important to know to call your servicer. Yep. Does anyone else have a question or thought, anything they want to share with us? All right. Well, I think, we have something in the chat box here.
Oh, you're welcome.
We are passionate about all things finance. So thank you for that. We try, everybody can be financially stable. It's a matter, but a huge part of it is understanding. So we are so glad that you found this to be helpful. I think today was recorded, right?
Yes.
Yeah. Share out the recording, and we're going to share out the PowerPoint too. So you'll be able to click through any of those hyperlinks or things that would be helpful if you want to refer back to this presentation. One caveat, student loans constantly change. This presentation, we built it a few months ago. We made quite a few updates for today, and in 3 months, this could be entirely different. So we will say student loans are constantly changing. Just be sure that you're aware of the most up-to-date information, especially federal student loans. I think I had another thing in the chat box here.
Another thank you.
Oh, okay, perfect. You are welcome. You are welcome. We thank everyone for your time today and for giving us, a little bit of your afternoon to talk about a pretty heavy subject, but one that impacts, as we talked about, millions of Americans nationwide. So, thank you for giving us your time.
Yeah.
Thank you, guys. Thank you.
Yeah. Have a good weekend.
Yeah.
Have a good one.
Bye.